When your time comes, don't postpone it. When others doubting out, you don't condone it. Truth be told, yourself is your toughest opponent. When your moment comes, grab hold and own it. Never let go, stand tall and hold tight. Overcoming obstacles is the objective in life.
Hello, everyone. Vector here. Welcome to Man vs. Theta for the December 2nd. Let's get into our daily chart review. Okay, first up is CRM. Okay, based on the watch list, the an earnings action and reaction to acquisition of Slack not looking good, breaking below major support on daily. And then we have some levels here. And the level was 215. Take a look at this. Got down to 215.60, pushed. First, just dumped it right at the open. And this is, I think, in pre-market, I was saying, hey, I'm going short here. And then at the open for this, dumped, cover right here, cover the rest here. And then what I didn't do was go long. I think I might have gotten here. I can't remember the trades today. But the way to trade this is we know the watch list level is at 215, right? We have a double bottom here after a drop. Think about the drop. It dropped from 242 yesterday all the way down to 215, right? So we got this. We got a double bottom. Can start along here, right? Or, and then starts going here. You can get long here, 217, 218 right here, and risk to 216, this low right here. And you can go, hey, you know what? We had a big drop, but there's going to be a pushback to at least test the open, right? The open high was 226. And if you did that, you would have had a nice long, risking, say you got in at 218, risking to 2 points to 216. How much room is there to the next watch list level? 230. And then I didn't have one here because we didn't know how this open was going to be. But there's basically enough room that might go to 230. And then we have the open high here to target as well. So if you're risking 2 points, you can say, hey, I'm going to test, looking at least for the open high right here. So we can say 225. And from 218 to 225, that's 5 plus 3, 8 points. The upside risking 2. So that's a 4-to-1 risk reward. It's worth making an attempt for this. Upside for this, because you have at least 8, and then if it actually starts going hard and go all the way to 230, that's a great risk reward. Okay, so you can get long there. That you can do with commons, and then let's just say, hey, instead you wanna look at the calls. Again, it's Wednesday, it's early. We can target that high a day contract. Let's take a look and see what happened to the 225s. Okay, right at the open, the 225s. So this 218 mark, that's roughly at 10 o'clock, 9:55, 10:05. So we're looking right around here. So those contracts right around here were about $1.80, and you can risk to say $1.30, so 50 cents. Okay, if we use our ratios 3 to 5 for our exits, okay, so we're getting in at $1.80, risking to say $1.30, 50 cents. That is, where do we want to sell? We want to sell at $1.50 above this $1.80. We want to start selling there, right? So what do we have for $1.50 plus $1.80? Say 2 plus 350 minus 20, so 330. So we want to start selling at 330 and maybe add another dollar for the 5x, and that's 330 to 430. Okay, look at the magic. Pushes, you got them green. Pulls, push, you get the 330 for 3x. Look at the high, 420. Didn't quite get the 430 for the 5x, but you pushes here. You can start selling a little bit here at $4, 420, and then have your stop for the rest at say maybe 330. Right, great, good enough. You got the 1.5 points. You got the 3x reward for one risk. So 500 to make 1,500 to $2,500. Okay, you're only risking $500 here to make great gains. Okay, so if you're risking 1%, $500, if you have a 50K account, you just grew your account by 3% by selling it at here. That's what the power of 1% is all about. That's the power of compounding. This is you risking 1% while you're learning. You risk 1/4% or 0.5%, right? And you do this on 2 trades, you got your 1% for the day, right? And so this is a great trade. Now, why do you want to do this? I mean, it looks like shit. It's dropped. It's going to go down forever. One, we have a double bottom, 415. It's had a huge drop. CRM is not a bad company. It's not horrible. I still think it can go lower, but for this initial drop, and it holds, you're going to have people cover the short. You're going to have people covering. They want to cover and lock in the gains they had. So you're going to get a pop. And then this is where I said in my comments that, hey, look for the short and rejection around 225, and 224 is where I want to enter. And as long as it stays below this 226, I like the downside. And so that's the second trade on this now. Now, if we're going here and we're thinking, hey, it's going to at least come to VWAP and maybe break lower, you can take the 220s, or you can say, hey, you know what? The next target is 200. I'm going to see about the 215s. So let's take a look and see what happened to the 215 puts. Okay. The 215 puts, 60 cents, pushed, actually $1.20. Second time it came down to 50 cents, 60 cents here. Rejected. You can get in on those two. You can get in around 60, 70 cents and risk to say the low, this high right here, and say, I'm going to risk all the way to this 50-cent mark. Or realistically, I would only risk to say 60 cents. It's choppy, so let's just say we're going to risk, we're going to get in at, I just want to make the number simple and quick for this, but let's just say we're getting in at 75, risking to 55 for 20 cents. Okay? But really, you'll probably get in at 70 cents. So let's just say that. Okay? So you're in here. You're getting in here on this push and fail. Because you want to risk to this right here. So you're getting in right here on this 225 test, fail. You get in, risking here. So we're risking 20 cents. So 3-to-1 risk reward. We want at least 60-cent gain, right? So we're in at 75 cents. What's 60 cents plus that? It's $1.35. Look at this magic. Boom. $1.35. And then and it came all the way back. So you can then raise your stops, maybe sell $1.20 for the rest, and you call it and go, hey, that's cool. Or you risk and say, hey, I'm going to risk now to 75 cents, your entry, and then you stop out on whatever you didn't sell. Good enough. But then you watch it and you go, hey, you know what? I still think it can go. You can go back in. All right. Or you can keep your original stop and we'll go from 75 cents, just raise it 10 cents to 65 cents. And then just say, hey, I'm going to risk to this and see what happens for the day. And if you did, you won another 40 cents on top of the $1.30, which is $1.80 for the 5x reward. Boom, look at that, $1.80 spiked into that, done. So nice risk reward trade that could be done here, right? So you can take, let's just say that you took 10 contracts, risking $200 from 80 to 130. 75 to 135 or one, yeah. And you made 60 cents, so $600, risking 200. And then if you actually sold a little bit higher, then you made a little bit more. That's 3-to-1 risk reward. Great. If you did $500 worth, you're selling for $1,500 profit here. Done. That's all you're wanting. right? 3-to-1 risk reward gets you to a 10x account faster than you'll ever imagine. I say a year. At 3x, you're going to get there a lot faster. Okay, let's move on. Okay, next ticker was Facebook. Let's see. I'm not going to go through all the tickers just for the sake of time, but Facebook is a good one. So we had the watch list level. We had a flush. I believe, let's see, does it show here? I think we had 280, 279. We didn't get the 280 dip, but it washed, held, crossed over VWAP. The thinking was that they were buying a lot yesterday anyways, and we could get long for 290s plus. So we have this, we have the cross back over the 284 support. You can get long, risking to VWAP, or get long here, risking to VWAP, and you target the 290s. So let's take a look at what the 290 calls, right? Because this is what this was here. And so if you took the 290 calls right there, this is what those, though, if you took it at, so there's a multiple entry points here. So I want to kind of go over these, each entry here. But let's say the first half an hour. Okay, first half an hour, dip, support found at 90 cents, $1. Say you're in at $1, risking to 90 cents, risking 10 cents roughly. Maybe you're at 98 cents and risking that. So you get it in $1, the 290s, you're risking 20 cents, or let's just say 20 cents. You want to sell for at least $1.60 to $2. Okay. So very quickly, we got the $1.60 consolidation. If you think it's going to go higher, we then got the $2. You can lock it. Okay. Then we're watching the consolidation, right? So it came from here up to here. That's 3-to-1 risk reward gain. Great. Then later in the day, it's pushing, consolidating. I think we saw some call flow, or it just looked like it was about to go. Pushed here into $2. This is where I mentioned, hey, get in at 2. We can add it $1.80, and our stop should be $1.50. Okay, as long as it didn't break back below this area right here. This was the where we were getting in. We wanted to hold on to this. Actually, I think it was let's see, the time 10:48, 10:45. So 10:45 was this push right here. Okay, yeah. So this is where the all the stuff started, right? So we were like, hey, as long as it holds this, doesn't come back below this, we want to be in this trade. Okay, we want to stick into this for this hold. See, this is the opening high. We're looking for this, expecting this to be tested, and then start moving up. And if that is, it's a strong, it's a strong indication that we could have more upside. So we're in. Stops are here. We just sat on it, and then we were risking 50 cents. So we were in, let's say, a $2 average. Our plan is to sell at $3.50 for a 3-to-1. Went from $2. We got our $3.50. Okay. And then 4-to-1 if you got sold here, or $4.50, 5-to-1 into the spike. So that's one trade. So this was one trade entry right here for the 3-to-1. Then this is another trade for another 3-to-1 reward. Now, a technique that you can also do, okay, so if we were talking about the entries, was, hey, you know what, you maybe going to risk $100 and you take 2 contracts. So if started off at $2 roughly right here, added at $1.80, so we have a $1.90 average with 2 contracts. If it gets to 150, we lose 40 cents on 2 contracts, $80. No big deal. You're not worried about it, right? And then what we're thinking is, hey, we want to see if this actually starts working, right? So it pushes up here, pulls back, yanks, and then once it crosses this level right here, it was 245 or 235. My thought was, if it crossed this level right here, I want to start adding. So at 230, you add. Okay, the $2 might have stopped you out if you use the $2 stop, but you want to kind of watch, right? I like to use 2 breaks of a level and not just the first stop to stop out. So what that means is it pushes, pulls. If it breaks it, that's okay. But what I want to see is it may pop up and then dump again. And if it does, then I'm out. Another way to do this is you see this push and you see it, maybe it's struggling a little bit and you expect there might be a yank. Because a lot of times you see the push, you'll see a yank before it starts the real run. When you see this set up right here, and then it starts going like this with volume, you see all this volume come in, you load up. And I kind of alerted that, and I was doing that. And this thing paid, righteously. So coming back to the thing where we had two contracts, it pushes, pulls, starts going again. We add at 230, and we add three contracts, right? And we're going to put our stops at roughly $2. If it goes back, then the idea is dead, right? So we're adding three contracts. So now, if our stops on we're in it with a $1.90 average for two. We're at three contracts at 230, and if it goes to, we're going to lose $100 here. We're going to lose $90 here, and if it comes back to two or $1.90, let's just say we're going to lose somewhere like that. And the two contracts are actually in the money, so we don't have to worry about that. So we're going to lose maybe $100 if we're wrong. But if we're right, okay, by doing this ad and risking $100, you now have five contracts. And let's just say we have a 220 average, okay? When it now goes to our 350 sell target, with five contracts, risking $100, you made like $600. 350, 360. You're going to make like, $600. Instead of, if this, and it goes and you have two contracts, instead of to 350, you're going to make $300 or $320. So you're risking the same dollar amount. Roughly, we were risking $100 over here. It started working. We're now risking $100 again, but we added size. We've raised our, we had a couple that we got here. We raised our average up, tighter stop from 50 cents here to 30 cents here. Tighter stop, more contracts, more reward, same dollar risk. So really stop this, rewind, go over this whole video or this whole portion of the video again, and really kind of think about how the scaling on this worked and the math. Because you could also sold three here and then sold the last two up into this 450 for the 5x. And that would have got you another, from the 600, would have made another $200 more on that. So like $800 risking 100, 8-to-1 risk reward. Take that all day long. All right. So that's Facebook and how to trade it with the entries and that price action. The key, again, is it did a high-a-day break, came back and tested, pushed, get in, risk to this high-a-day break, let it work, and pay the 3 to 5x. Okay, next ticker. Let's see, what time is it? Let's see. I think I'm going to go ahead and wrap it up. I think those were the main ones that I wanted to talk about today. Actually, let's talk a little bit about PayPal, because PayPal, there was, and we'll go to Tesla as well. So PayPal had a big dump. People were getting long here. I didn't want to swing long here at highs against this resistance at 220. I didn't think it was a good risk reward, and it yanked. And then, I kind of had said in the watch list notes that I'm kind of expecting some consolidation in this ticker before the next leg up. And that's what we're kind of getting, right? And so, yeah, I got this. It got to the level, but it was kind of rejecting, right? It pushed up, double topped. We never got a real good close. We got a close right here, and then it failed. So you could have started in here at 213s to go up, and then it broke rebound, right? And rejected right quickly. And so that just means it's kind of weak. And then it came back to 210. And then it chopped around. Like we got a higher low. We can say, hey, okay, I'm going to get back in. Higher low right here. I want to get long here. Risk to here. It pushed and then failed back on this. There was no real good reason, while we have consolidation going, to expect that PayPal makes new highs today. I'm kind of looking for Bitcoin to cross 20,000 to be the trigger for the next leg on PayPal for now. But the important thing to learn here is that when you have chop around VWAP, you can try it. If it works, great. Let it work. And if it doesn't work, then it's not the right time. and just don't try to force it. That's the lesson on that. Now Tesla, same situation at highs. My notes in earlier the week was I was expecting us to chop around between 600 and 550. We got the dump on Tesla into the 550, 540. It started pushing as soon as it crossed over back over 554. We went long, pushed right up here into the 570s, and sold. Right, look at this quick run. And as long as this stayed above this red line, I was kind of like wanting to give this a chance. But as soon as it started flopping around here, not worth it. Let's take a look at the 600 calls. I can't remember if we took 600 or 590s. Okay, risk reward started crossing, getting in at like 350, risking to say $3. We want to sell at $1.50. So $3 $3.50 plus $1.50 is $5 or 50 yeah, $5. Boom. Got here. Hold some to see if we're gonna get the 5x for 6 or 7. We didn't, but we got close enough with 5 to 6, started stalling, stop the rest out, and that's a good enough trade. And then after that, I was done. Like this was a beautiful morning, multiple trades with giving us 3-to-1 risk reward. At this point, I was kind of like, hey, look, I don't need to make any more trades today, and this is what I want everyone to get good at, right? In the first hour or two, you get your 1%, 2%. I think I was up at 10%, and I gave back 2%, trying to make other trades. And at that point, I said, hey, look, I don't want to go under 8%. So I stopped. I gave back 2%. That's good enough for the day. I gave back 20% of my gains for the day. That's not chump change. And so I was good. I was content. Right. And the whole thing about the 2-hour trader program is finding these great risk reward trades that happen in a half an hour, and then go enjoy life. Right. Go take care of other things that you want to do. And then don't get caught up in chop, and don't overtrade, and don't give money back. You just don't need to. So I'm going to wrap that up. I hope this session was helpful. Give me feedback. Be sure to give reactions. And thank you very much, everyone. And I'll see you tomorrow in the trading room.